Short Vol Show, and my name is Dave. And as we join the markets today, it is around lunchtime as we broadcast from Cape Cod, the home of the Pilgrims. And I want to welcome you to the show here today. We have some pretty calm market action for a Monday. Markets, major indices up. The Dow up 186 as we speak, with E-minis up just under 11 points, and the NASDAQ up almost 50. And as you might guess, with major indices up, we have volatility coming in. VIX just a little over 13 right now. About a point between the VIX and the front month future, which is trading 1407 as we speak. The second month future trading 1475. About 5% contango between those two futures. 5% contango means that all things being equal, the VIX ETPs will decay by or lose value by 5% over a month time due to contango. So keep that in mind. That's these things are decaying as we speak. Over the weekend, we had a little bit of controversy in the old Facebook group, and this was due to a post by a gentleman recommending people get long or buy TVIX and get long TVIX, you know, sort of like the market's going to crash, got to get long TVIX, so on and so forth. Now, this happens a lot, and let me just explain to you the way I see TVIX, and it will maybe help explain my consternation when I see posts saying the market is going to crash and buy TVIX. And let me explain to you why I don't necessarily agree with that. But first of all, I just want to mention the sponsor for the show, Gorilla Trades. Gorilla Trades often has a quote of the day, and today's quote is from Jesse Livermore, famous trader. Those who trade in Chicago will know the bar right next to the exchange, Jesse Livermore's. But famous trader, rags to riches type guy. His famous book, Reminiscence of a Stock Operator, is a must-read. I recommend everybody go out and buy that and read that right now if you have not read it before. But the quote is, "The stock market is never obvious. It is designed to fool most of the people most of the time." Now, when we're talking about TVIX, this is the way I see TVIX. Are you familiar with scratch tickets that you can buy in gas stations where you have a shot at making money? You put in a little bit of money and you have a shot at making a lot of money. Well, that's kind of the concept with TVIX, is that if you buy TVIX at the right moment and the markets happen to crash, you'll make a lot of money only investing a little bit. However, most days of the week the market does not crash. And in fact, most days of the month the market doesn't crash. And buying TVIX is like a lottery ticket. When I first started the Facebook group, which I encourage you to become a member of. This is a Facebook group, the VIX group. There's a couple different Facebook groups, of course, but the VIX Trading Group. When I first started that group, this was before the Volmageddon of February, and I was pretty concerned that the only people that would join would be people who were professional traders or people who just always shorted the VIX in one way or another, because with the popularization of the trade to stay short the VIX by people like Seth Golden, who was incredibly successful and was covered in the media, many people in the retail sector started shorting the VIX in various ways. They would do it by buying XIV, by shorting UVXY, by shorting TVIX. And we would notice on StockTwits that the people that got long TVIX or the VIX through these ETPs were the kind of people that were trying to get a lottery ticket. They were trying to get fast money, and they would get long UVXY or TVIX in the hopes that something bad would happen and it would pop and they could get in and out for a quick profit. And those kind of people the longs were not lasting very long because we were in such a low volatility era that basically all these things went straight down, so that anybody that got long got run over. Now, they didn't get run over quickly, they got run over slowly. It was a slow meltdown on all these products. And so what you would see on StockTwits was people would come in, they would join the forum to the long side, and they wouldn't remain very long. They'd be there a couple weeks, a couple months, and then they disappear. Whereas the people that were always short the UVXY were there for longer periods of time. And so the real core of the thread on StockTwits was the short people. And that was a kind of the group of guys that originally were hanging out all together, and where the idea for the Facebook group and sort of my channel came out of. So I was a bit concerned when I first started the Facebook group that the only people that we would have were people who were successfully shorting volatility all the time through these ETFs. And so the problem of having people come in who are sort of overly enthusiastic to buy TVIX and to buy UVXY, and who wanted to get long volatility in this. It's sort of an inefficient way to get long volatility, buying these ETFs or ETPs. But when it works, it definitely works big. And so I was concerned when I started the Facebook group that I wasn't going to get enough people from the long side. I figured all the shorts would come on, but the longs wouldn't join the group. And so I was a bit relieved and happy to have people that were long or played it from the long side in this group. Now, any quote-unquote real trader will be long sometimes and short other times, and will selectively trade reacting to what the markets are doing. Well, there's tons of different ways to trade, but most long-term traders will be long some stuff, short other stuff, and it might switch around this or that. And so I wanted this group to be about volatility, not about shorting volatility specifically or getting long it. And so I was happy to see longs join the group. And, there was a period of time in February where to be long was to be right for a while. February and March, you could jump on TVIX and just hang out and wait for a couple days, and it would pop, and there was no decay because the term structure was flat. But now that we're back in contango, it is a bit more risky to get long TVIX because it's going to decay over time. And so my rule of thumb is always, if you're going to get long it, don't stay long it for more than 48 hours. So what was the controversy over the weekend? Well, the controversy was somebody posting a post, which I'm not sure if it's still here or not, but let's see if we can find it, saying, get long TVIX. Get long TVIX and hang out and get long TVIX because the market's going to crash. And the person wasn't really putting a whole lot of evidence as to why, etc. And let's see. It was this guy Rishi, and let's see if I can find it here. Anyway, he posted, the market is going to go down 200 points, get long TVIX. And with no real sort of rationality to why to get long it. And it was posted on the 31st, which was, hold on one second here, which was Thursday night. But some people didn't see it till the weekend. But as it turned out, the market didn't go down, didn't crash, and getting long TVIX wouldn't have worked out. But that's 2020 hindsight. But the point is that we have a lot of people all the time coming in and saying, get long some sort of lottery ticket for the market crashing because they have a feeling that the markets are going to crash. And it usually doesn't turn out to be the case. Now, the phenomenon that's oops, there I go, kicking the desk. The phenomenon that's so upsetting to me at times is that on YouTube, those who come in with the videos of doom and gloom, the market's going to crash, get tons and tons of views. However, the market doesn't crash, and those like me who say, well, okay, the market's going to go up slowly, the market's going to continue to go up slowly, and that's what's going to happen. When I say that, it's not as sexy, and it doesn't get as many views, but it turns out to be true. The market does go up slowly, and we don't crash that day. But for some reason, people on YouTube would rather hear that the market's going to crash, even if it's not true and it doesn't happen, because they love conspiracy theories and all this kind of stuff. So let's take a look at, let's see if we can find one of these examples of the market's going to crash. Here we go. Now, this guy has 98,000 subscribers, so 10 times more subscribers than I do. And he's got Stuart Varney, who I really don't like. And let's see who else he's got on. It's usually like Peter Schiff. There's a couple guys that always say the market's going to crash. And look, this video's got 67,000 views. Okay, May 16th, 2018. The market hasn't crashed since then. It's gone up. But yet people love to hear about the market crashing. And people love to buy TVIX trying to prepare for the market to crash. So let me tell you, the market doesn't usually crash. In fact, it's very rare that it would crash. So don't waste your money on lottery tickets that have the odds completely against them. Instead, sell that fear.
I asked you when, and you kind of hedged a little.
Let's see what
late this year, early next year. And then I asked why, and you said it's the debt bomb. So that's your scenario here.
Yes, I mean, Stuart, do you remember 2008 and 2009? That was because...
So these guys are saying the market's going to crash, and then it doesn't. Don't be taken in by this. What we like to do as short vol sellers is we sell people's irrational fear that the market's going to crash, and we get paid for it. And so we collect money every day selling lottery tickets to people who think the market's going to crash. And at the point where the market does crash, it could be trouble for us, but we try to manage our risk wisely. And if we collect money every day, hopefully we should be able to weather the storm if things do start to look bleak, or we can take off our position if things start to look bleak, or we can hedge our position if things start to look bleak. So if you're buying lottery tickets by getting long TVIX all the time, thinking the market's going to crash, if it crashes, you're going to do great. But if it doesn't crash, your money's going to go out the window. So that's kind of how it works. And hopefully in this VIX group, people are being educated on this. And that's my hope, and that's part of the reason of the group. Like, let's take this post, for example, about the TVIX reverse split. And I want to talk about the reverse split for a second, too. When something splits, usually a traditional split is when a stock company does very well and the stock goes up to a price where the people feel that it's so much per share that it doesn't look attractive to purchase anymore. And so they split the stock, and it makes it a more reasonable price. And it's just a psychological thing. People would rather own 100 shares of a $10 stock than one share of a $1,000 stock. Because if you buy one share of Amazon, or I'm sorry, Google, and it costs you thousands of dollars, it doesn't feel as good than to buy 100 shares of a stock that costs less. And it's just a psychological thing, but it doesn't change the actual value of your investment. And it's the same thing with TVIX. Now, stocks, at times, the psychology of a split can affect the price of a stock. And what I mean by that is, seeing as a stock is supply and demand is what the price is based on. If people hear that there's a split and they get all excited about the stock, then maybe the stock rallies out of a split, because just the fact that it's publicized that it's split puts the stock in people's minds, and it's a psychological trick where they think, oh, it's cheaper, so I should buy some because it's cheap. Although it's not actually any cheaper if you multiply the number of shares outstanding by the price per share, it's the exact same thing as pre-split. But with stocks, sometimes psychologically, there is an effect where people jump in and buy it. And same with reverse splits. I've talked about before. Reverse splits happen when a company is just doing really poorly and the price gets so cheap that it's like less than $1 and they're afraid it's going to be delisted from the exchanges, so they reverse split it. And that psychologically can make people sell into it sometimes as well. And an example of that one would be Dries in a couple years ago. Dries was always going down, and every time it reverse split, the day it reverse split, it would usually go down more. However, with TVIX, it's a derivative product. So the supply and demand for TVIX is not the determining factor on the price. The determining factor on the price is the supply and demand for VIX futures. So unless somehow so many people start buying TVIX that it actually overwhelms the price action in the futures, what people do in TVIX is not going to be the determining factor in the price of TVIX. The determining factor is the VIX futures, and the VIX futures, once again, to remind you, are based on price action and the SPX puts. So that's where all the money is. The vast majority of the money trading is in the SPX puts, and thus a split, even if it's a psychological thing with people buying and selling TVIX, where they're like, oh, it just reverse split, I'm going to A, buy it, or B, sell it. Even if that was having some kind of emotional effect on TVIX, it would not be determinative of price, because TVIX is a derivative product of VIX futures. So when there's not a play with the split. If you're talking about UVXY, there is potentially a play with UVXY because of option pricing. Now, option pricing, when you reverse split, it changes the calculus of return on investment and the space between the strikes and options premiums change. It's a new calculation when you have the split, because you have new strikes, you have a different width between the strikes, and you have different pricing of options. Now, there's a it still isn't like you lose or you gain something based on the split, but the strikes changing can affect your return on investment for certain option strategies with the UVXY. But TVIX doesn't have options, and the effect of a split is moot on it. You could argue that other quote-unquote stocks, the effect is, you can have an effect, like a psychological effect for a split, but not for TVIX. So that's a commonly asked question. And I love the fact that on our Facebook, somebody comes in and asks, should I buy TVIX before the reverse split? And you get people kind of explaining or trying to have the person flesh out their strategy. That's what Brendan's doing here, trying to get them to flesh out his strategy. Other people explaining what is happening with the split and setting the person straight. So that's great. Somebody can come on the forum and ask a question, and there's answers to it. Now, there's no stupid questions on here, so don't be afraid to jump in and ask a question. And there's a lot of misinformation about TVIX and volatility and VIX, and so that's why we're here, is to try to educate people on this sort of thing. Okay, so let's take a look back at the markets again. My internet was down this morning, so I was unable to come on at the usual time. I apologize for that, but I am here now, so that's exciting. And hey, LaSalle, what's up, buddy? I'm not sure if you're still in the chat, or still listening, but nice to see you today. Yeah, market action, pretty exciting. It seems like we're back in the slow rise of the market, and I am looking at the MJ stocks for some plays, specifically at Afria. Let's take a look quickly at Afria stock. So in sort of a mid-range, I've been looking at it the last week or so because I think it's a good place to jump on. I think the downside really is like it looks like that $8 mark is a good a good stop if you're going to use stops. I don't usually use stops, but 750, 775, you put your stop in, and you look for that move to 14 soon. I mean, there's stuff coming up in the legislature in Canada soon about these MJ stocks, but I think that the huge optimism that we had in December and then the pullback, it has reset for another move up, and I definitely see this going higher. I'm talking about the whole industry here now. Let's take a look. You guys should check. If you don't know about this, you should check this out, the marijuanaindex.com. It gives a good baseline for understanding about MJs. You've got the North American index, but then you can break it down into U.S. stocks, which is a pretty small group, and the Canadians, which is the majority. And you see here there's a divergence between last few days between Canadian stocks and American stocks. The American ones rally and the Canadian ones not so much. I think that we are reaching a point here where like all the bad news is out there for Canada, and I would think we get a resumed rally in these. We are going to have Chart Guys Dan coming on the show pretty soon to give us another view of his own of the MJs. So look forward to that coming up soon. But there is an opportunity here, I believe, in the MJs. So I don't know when. I know I'm going to take a piece of and just it's kind of like a long-term hold by one of these, whether it be Canopy, Afria, or ACB. So Canopy did start trading on the New York Stock Exchange last week under CGC. Here it is. It right after it was listed, it sold off, but now it's rallying again. I think this thing could go to $100 easily. It just is nonstop. It's hard for me to buy it. It's hard for me to buy it higher up here in the range, but I might just close my eyes and buy. But I am looking at Afria here, just to participate in this rally. So take a look at that, see what you think. Okay, so that is hi Seth, what's going on, buddy? We're gonna have you come on soon again. All right, so that's what's going on right now in the markets. Hope you're having a good week. Seems pretty calm right now, and just the resumption of the rally. Amazon up $12. This other one that I missed the boat on, Boson. I'm still bummed out about this. I bought it for $8, sold it at $9, and now it's just been ripping to the upside. Now, Boson is a Chinese company that it's kind of like a glorified Spotify in that they take companies and they provide their presence online in a sort of shopping setup in the Chinese markets, but it's more, they do more for you than Spotify would, but it's a similar product. They represent major companies in a lot of cases, and the company's just been doing really well. Obviously, China, volatile stocks, but one that I've been watching for a long time and have been on the sidelines, although I kind of wish I had jumped in at some point, and I would be looking to jump in on a pullback here to save, I don't know, 45. I know that sounds like it's a long way off, but these things are very volatile. So, with stocks, it's like there are always opportunities, and that fear of FOMO, fear of missing out, is a big concept. You fall in love with one of these, it makes a big move, and you miss the move, but you still are in love with the stock, and you jump on, and you've bought the top. There always are other opportunities. So don't buy the top, my friends. Wait for a pullback. Wait till optimism isn't so great. If everybody's talking about a stock in the news and there's huge optimism, that is usually when the smart people are getting out. So that's kind of too late to be jumping in my opinion. So as we check, as I'm about to end the show here, E-minis up 1250. Dow Jones up almost 200. NASDAQ up 60. So NASDAQ's been rallying as I've been chatting with you here. Thanks for watching, and we will see you next time on the Short Vol Show, sponsored by Gorilla Trades. Please check out Gorilla Trades, link in the description below. They've got great stuff, and one of my favorite things about Gorilla Trades right now is their emails they send me every day telling me what's going on with numbers and the rest of the market.